Okay, folks, good morning and welcome to a quick morning update. As expected, we're seeing futures down on the morning. No great shock there. I expected, frankly, it's not necessarily what I expected. I expected one of two things. One was bright red futures, meaning a huge gap down, more than what we're seeing right now. Yeah, we were lower earlier, but they're struggling to fight it back. 42.36 on the S&P 500 is at current resistance. We'll see whether or not we can get through it. I doubt it. We're going to hold it. The other expectation I had was for a gap up and then the typical fade, which is really psychologically damaging. But this is a perfect example of, we're at support on the NASDAQ. This is a perfect example of today's lows could be tomorrow's highs, where you get these consistent gaps down. So on any counter trend rally, because we already have our new weekly lower lows, we're going to look to lighten up on certain positions and raise some capital. And let's let this get past us. We continue to obviously manage Netflix. It's not looking all that bad. Yeah, we're down a couple of points in the pre-market. We were lower. Looks like we may be setting up for a higher low here. Volume's light, so we don't know yet. We don't know whether or not this is a head fake, whether we'll fail, move to new lower lows with the rest of the market. But the thing to remember is that last week we saw a tremendous amount of selling. More than 50% of the outstanding shares were traded. So obviously a lot of those shares were simply shares being traded. Many others were institutions rotating out, other institutions rotating in to new, firmer hands. So while I expect Netflix to remain under pressure with the rest of the market, let's keep in mind that it did not perform as poorly as the rest of the market. It performed about a percentage point better than the rest of the market, or the NASDAQ, I should say, on Friday. We'll see if that holds up, and I suspect that any counter-trend rally on the major averages will result in a significant rally on Netflix. It's at its cheapest PE ratio probably in history right now. So a lot of the damage has been done here. We'll continue to manage it. Tesla, pre-market. This is a stock that I think could be shorted on any counter-trend rally. Elon Musk is clearly devoted at current to focusing his attention on Twitter, and Tesla stock is very expensive. And if he is leveraging up, basically margining his position on Tesla, that puts him in a very precarious position. So I don't think that net that's a positive for Tesla shareholders. So the name of the game today is simple. If you have capital, hold the capital. I would not be buying a dip here. We're at critical support levels. If we take out the March lows, we're going a lot lower. Gold is not a safe haven at current. It will be, but at current, it is not. When I woke up this morning, we were down here at around $16, $17 down on the session. Now we're down 23. No bids. As for Nugget, another gap down. So as I mentioned on the week ahead commentary, when you get these vast sell-offs, with the market rolling over, there are no safe havens. Longer term, there will be. Longer term, the price of gold is climbing a wall of worry, as is the price of silver. So what we need to keep in mind is that during the beginning of a bull market, you see one step forward, two steps back at times. And at the end of a bull market, you see two steps forward and one step back. So we're climbing a wall of worry here. There will be opportunities, and frankly, Nugget down here is looking somewhat attractive, but it can go lower. It can definitely see the 50s. So let's not try to catch a bottom here. Remember, daily Stokes are weak and getting weaker, so no rush to go buying these dips. It's all about liquidity, your capital reserves. Maintain those capital reserves. All right, folks, I'll catch you later. Be well.